very warm welcome to Bharata First. You're watching the Discourse with me, Rausan Pereira. Since you're here, I have a humble request of you. Please like, subscribe, and hit the bell icon and share the content so that more people get to know about Bharata First. That's it, nothing more. Well, we also have a YouTube membership program with some great perks. Do check it out under the join button on the YouTube page. Now, the economic growth of India largely depends upon various sectors of industry. Approximately 4 to 5% of India's GDP is contributed by startups. Where we aim to be the world's third largest economy, the onus lies on Indian organizations as one of the key determinants of microeconomics. Over the last year or so, India's flagship startup Byju's has made everyone weary. In a relatively short span of time, Byju's credibility has taken a major hit, from being India's most valued startup to one whose future is in question. This has raised several questions, the answers to which are still not clear. In this edition of the Discourse, we will analyze Byju's troubles and the Indian startup ecosystem, the challenges and way forward. Joining me on the program today are Ajay Shankar, former Secretary, Government of India, and Bhanuchandar Nagarajan, former consultant of the World Bank and an economist. Thank you to my guests for joining me on this edition of the Discourse. Mr. Shankar, let me start the program with you first. I mean, over the last year or so, we've seen that, India's so-called blue-eyed startup Byju's has been in a lot of trouble. It seems like the foundation has gone off and the building is now standing like a house of cards and ready to give in at any point in time. How would you look at this situation?
I think it's a good idea to step back and understand this world a little better. So, on the one hand, you have a startup, an entrepreneur with ideas, big dreams, and ideas which seem to make sense and which could generate fortunes. Now, generation earlier, this young man would never get money to do anything to try and realize his dreams in India. In the US, this has been the case now for 100 years. So he couldn't get money, and so his dreams would remain dreams. The only people who could actually take their dreams forward were people who came from business families. So the parents would be willing to indulge them to either diversify or start something new, or friends and relatives, again, could do so. So if you look at India post-reforms, the great success stories of startups has been in the IT sector, where you didn't need hard cash to start. So now in the last 7-8 years, India has changed, and there is a lot of money based in the US, which is sloshing around and looking for great ideas where great fortunes can be made. Now, those who are looking at making fortunes and therefore investing in startups are looking at reasonably high returns. It's not patient capital. Secondly, it's a capital which is not risk-averse, so they're willing to take great risks. And again, importing the culture from the US, they are not looking at dividends or profits or returns in the 1, 2, 3, 4 years, the date they invest. So they're trying to replicate what happens in the US, that the valuations go up and up, and therefore you, on paper, make a huge fortune in terms of the valuations, even before the company is listed. And in that process, you make huge fortunes. Now, this is also in some ways a very risky proposition. In the US, there are many companies whose valuations are sky high, and they are yet to declare profits, and they're growing very fast. So the same thing came to India. So you had now a convergence of two streams. One, dynamic, energetic young men or young persons with great ideas. And on the other side, a lot of money trying to seek high returns through valuations. So between the two, we've had this sort of great story of startups in the last many years, and high valuation, great, media attention, and so on and so forth. Now, even in the US, it happened, and we're beginning to see that happen in India. that since those who are investing are looking at very high returns, and the assessments are based on somewhat fragile foundations, so it can easily happen that one day you lose confidence, and there is a kind of herd mentality, everybody loses confidence. Now, for your viewers to make them understand a little more easily, let's look at not the startup world, but well-established, one of our largest groups, Adani's. Now you get one Hindenburg report and they're about to crash. And the prices just crashed. Now, 6-7 months down the road, I think the Adani group is not disappearing. They are surviving and maybe go forward on a steady growth path. But in the process, a lot of people who sold out early or sold out when the stock prices were going down lost a lot of money. So that's the nature of this kind of stock market and the nature of financial flows into that market and out of that market. So now if we come to the case of Byju, now I'm not familiar with the full details, but I see something similar happening in the sense that a great idea being implemented and great inflow of capital. And then suddenly some analysts come into the conclusion that this idea, though doing well in physical terms, is not likely to generate the cash and the profits on the basis of which money had come in, so that money is going out. So now this can happen to any other number of startups, and so some startups then choose to sell and get out and find a big player with deep pockets to take them. But there are many Indian startups who've done that over the last 10 years. And the most famous is Flipkart, who sold out to Walmart, if I'm not mistaken. So this is the way to understand this. But if I take a broader picture, the great positive development is that young men have a world and an ecosystem of startups where you can go get money and make big things happen. Now, the US culture also has a world where people become bankrupt, start again with another enterprise, and again make a fortune, sometimes lose it, and so on and so forth. So that's the kind of world we have imported or which is emerging in India.
Absolutely. So it's vicious, one little article or one analyst coming out with a report can really send shockwaves as far as the industry or that particular company is concerned, but you have to ride the storm is what Mr. Shankar is suggesting. But do the startups have the stomach to ride the storm is another question as well. So let me welcome on board Vinita Hariharan, public policy expert as well. Welcome to the program, Vinita. Let me come back to you in just a bit. Before that, let me bring in Bhanu Chandar as well. Bhanu, very important point there being made by Mr. Shankar about, herd mentality and, one analyst report coming out or one major institution bringing out some kind of a negative report. Is there a way to insulate against such practices, or I don't know, because of the lack of a better word, I'm going to say practices, but is there a way to insulate against such things?
So to answer your question directly, Frank, there's the nature of startup and the VC industry follows a particular pattern. So there will be period of booms and busts, like very much like in life or in startup or in even stock markets. There is going to be a phase where there is going to be excess capital flowing in, and there will be times when capital will be very hard to get to. So from 2017 and 2022, like we had almost very low interest rates, and it was very easy for LPs and VC firms to like raise funds and invest in startups. So when more money is there, then we have a tail wagging the dog situation, where like more monies are chasing the same startups and the valuation keeps going higher and higher. For example, like Byju at one point was valued at $22 billion. Now it's down to $8 billion. So these things happen. This is the nature of the beast. I don't think like this should be regulated or looked at it in a very negative connotation. This is the nature of the industry. This is how it works. But there are certain practices that could be regulated properly. So what Byju is being accused of right now, we do not know the true picture yet, is that there were very poor corporate management practices. They didn't come out with their financial reports. They were corporate governance issues such that two of their funders Peak 15 and process withdrew their directors. Salaries were not paid for many employees who are very valuable on TV and on the internet. So these practices definitely have to be looked at. And in fact, I think the Enforcement Directorate and EPFO are also looking at it. So there are these corporate management issues and fraud related issues which we have laws for and which has to be dealt with. But there are certain ups and downs which are in the nature of the VC industry or the startup industry. And I don't think that should be curbed. It is part of the creative destruction. And when the venture capital organization puts in money, they know this risk. They know the risk, and this is what they are actually putting in money for. When they get exits, they usually get exits of like 5x or 10x or even 100x, right? So this is the nature of the beast, and we should actually keep that in mind while doing any sort of regulation.
Absolutely, absolutely. Veeta Hariharan, let me bring you in now. Since you're talking about checks and balances and regulations, is there something to keep in mind? Is there some area that needs special attention, do you think?
Yeah, absolutely. Thank you, Frank, for having me over after a very long time. It's good to see you again. So regarding this particular case of Byju's, it's absolutely I know it's very disappointing to see that Byju's has come down in valuation so much, and this whole downfall that has happened maybe suddenly to the viewers outside, but it has been over a period of time that he's been seeing this kind of downfall. So I think it reflects a lot on the regulatory ecosystem as well, from the government side as well as from the the private regulatory framework. I think which needs to be more robust in India, because the kind of the environment that we're seeing for startups, it's very encouraging on one side because we have this whole unicorn system and we have this entire the ecosystem which is promoting startups and unicorns. But as Nagarajan just mentioned, we were not to discourage the growth of startups, but at the same time keeping in mind the checks and balances, like you said, that needs to be in place for startups, especially in terms of the governance of the board and the kind of, I think one lesson that we can learn from Byju's failure or the whole downfall of Byju's is the monopolistic nature in which he was, I think, running the business, and the way he ignored the advice of the bankers, the investors. Over a period of time, I think he began to get very confident and complacent. I would say, complacent, and also complacent in the sense negligent of regulatory frameworks, as if he's gone above that. So I think it also reflects a little bit on the philosophical side of things, where one needs to keep oneself also under checks and balances when you grow up too much, in the ladder. So again, this kind of anomalous growth, like Nagarajan said, this sudden peak is also to be we have to be mindful of. Like during the pandemic is when actually I think his business grew twice over and multiple times. But then, the V-shaped recovery was again something which is reflective of the pandemic times when everything went down, and then suddenly there was a spurt in business for every other sector in the world. So I think so I think he kind of got confident with that kind of growth, but at the same time, it reflects on the entire the way in which you govern a startup. So I think governance of startups needs to be reflected upon by the policymakers, the regulatory frameworks, the private sector, as well as the public sector, and the ministry is as well, Ministry of Commerce, and all of them should actually learn a lesson from Byju's and how we can actually have a regulatory framework which does not interfere with the growth and the running of the startups, but at the same time keeps those checks and balances in place. So I think it's not just Byju's. There have also been big conglomerates also which have seen downfalls in the past, and we have seen the government coming in, in their aid when they were in distress. So I think this reflects a bit on the private sector governance, culture and the frameworks there, because it can tend to get a little monopolistic because it's not in the public domain so much. So much of what happens in the corporate is behind the curtains, and so it also reflects in the transparency and of the reporting systems in the private sector, I think.
Absolutely, very rightly put, very rightly said. Now, broadening the scope of the discussion and looking at other startups as well and the Indian startup ecosystem, talking about lessons, Mr. Shankar, what are the big lessons as far as the other Indian startups are concerned?
The key lesson is for startups to internally assess or take external advice, and there is a mentoring culture that has emerged, that you be prepared for risk. You be prepared for a downturn and be prepared to survive the downturn as long as the underlying business model itself collapses in the market. So I'll refer to another great success story which ended in great tragedy, which is Cafe Coffee Day. So the key thing is that the startup, in terms of the way it gets capital, and capital now comes in all kinds of shapes and all kinds of agreements. So they need good advice because they're normally startups and not really very smart at all this. So they need good advice, mentoring or legal advice as to how to insulate themselves from collapse or a takeover, because the venture capital world, due to the herd mentality or other assessments, is wanting to exit. So they should not get to a point where they then need to go into liquidation or collapse, unless the underlying business model collapses. That's the key lesson for startups. That compromise a bit on high growth, be a little more choosy in getting in money if you want to survive the downturn. If you're happy to rise to the skies and get thrown out, that's also fine. It's a choice they should make consciously rather than without understanding the papers they are signing. Now, on the other side, I would say that I think the phrase which was used earlier is that this is a world of creative destruction, so we have to accept that as natural. So the underlying business model would collapse, there would be errors of judgment of where the market would go. All kinds of things will go wrong, and one should accept that that is normal. In India, we somehow, because of the old socialist days and stuff like that, are not yet comfortable with the firm collapsing. So we always want government to intervene, and government has intervened so much in the past that there's a legitimate expectation that government should intervene, nationalize, do something or the other to save jobs and make the firm survive. The worst example, of course, was pre-reforms, where all the sick textile mills were nationalized, and it's been bleeding since. So I think government and society needs to accept that in this world there will be collapses, and the collapses are natural. Now, coming to the world of governance, I think for startups, I think they are anyway short in internal HR resources. So I think light-handed regulation should the right approach. Yes, the chartered accountants are anyway now being pushed into doing their due diligence a little better. And
so, this is the nature of the game. This is how the cookie crumbles, is what Mr. Shankar is suggesting. And it's the nature of the game. There are risks, and those who invest know of the risks, and they know what they're getting into. So we as a society need to get used to it. All right, Banu, coming back to you now, let's try and understand, for a second, the health of the Indian startup ecosystem as a whole, because there have been several complaints as well from many young entrepreneurs who have said that it is extremely difficult, really, as far as doing business in India is concerned. And we are seeing over the years that many of our companies that do well eventually take their business outside of India to other countries. So what is the health of the Indian startup ecosystem?
So as somebody that has run a startup before, Frank, like I can totally attest to the fact that in India, it's not easy to run a startup. And so like whenever somebody says there needs to be more regulation, like I kind of frown at it. But it's true that, fraudulent practices have to be stopped and all that. But even let's go back to the topic that quickly that the other panelists were discussing, which is the fact that not all losses need to be because of fraud, right? For example, take the case of BYJUs itself. BYJUs made a lot of strategy errors, right? In terms of getting so much debt, they actually raised debt of around $1.2 billion, and they went into a spree of acquisitions. Okay, so these are business strategies, and also like education is a very wicked sector. Like it is so wide, and they got into test prep, they got into K-12, they got into coding, they got into so many other things, and it's a very hard thing to crack. So so the entrepreneur and the board of directors takes a call on these things. These are business strategies, and some will succeed and some will fail. So just because something failed, it should not be frowned upon. And as Mr. Shankar was saying, it's a part of creative destruction, and we should be celebrating it. But there are aspects. For example, I recently was listening to Ashneet Grover, who's another character. He was actually saying that after every funding round, the many entrepreneurs get a new car. Okay, for example. So those are the things that are actually you should be frowned upon, but should they be regulated is something that we need to think about, because these days VCs, when they put in their term sheets, they actually have clauses where they can claw back for even personal assets of entrepreneurs. So it should be left to the contracts between the venture capital firm and the entrepreneur, rather than government regulating it. The government's regulation should be very light touch, because India is a growing economy. We have 100 unicorns, 100 odd unicorns, and it is probably, we are going through one of the best growth periods. If you actually take a comparative look, China has 300 odd unicorns, America has like 600 odd unicorns, and we are just in the beginning. So there will always be success and failures. And I'm sure like so many entrepreneurs, both in the education sector and outside, are going to take a lot of learning from the way the Byju saga panned out in terms of the financing, the business strategy, and even regulation. So I think it's a great learning experience. And in fact, like, we are almost writing the epitaph for Byju's. Maybe it will come out in a different avatar. We do not know. So in terms of policy and regulation, I think like India is in a good place. I think like 26 states have startup policies already. It has created lakhs of jobs, and the number of women entrepreneurs are actually rising. I think like around 15% of Indian startups are women entrepreneurs. So it's an all-round success story. So we should not actually use this one failure, or like even it's not a failure yet, to sort of have a different picture of the Indian ecosystem, startup ecosystem.
Absolutely. Vinita, coming back to you now, so we've spoken about the challenges, we've spoken about the lessons. Let's look at some solutions and what they could possibly be.
No, absolutely. So, the thing that we could learn from Byju's, whatever failure, if you want to call it, is actually that he didn't plan for the bust, right? He planned only for the growth, and he didn't plan for the downfall. So I think that's one thing that startups would need to be cautious about, that, it's just not going to be growth and peaking all the time. It's also going to be a time when you'll have to come down in the growth curve. So how do you plan for that, those low times? I think that is one in terms of the business strategy, as Nagarajan was mentioning. And also the second thing is about, yes, I agree that the government is not, should not be in the business of doing business, but at the same time, being entity which is supposed to be looking after the welfare of the public at large. When we look at the number of layoffs, there are almost 2,500 youngsters who've been laid off by Byju's very heartlessly. So I think that's where, again, when you talk about the startup policies, it's encouraging to see that all states have their own startup policies, but somewhere, if there's a buffer that's created, some kind of protection for layoffs by startups, and making the startup owners also accountable for these layoffs, and maybe creating some kind of a buffer fund for your low times, and also looking at employee protection. I think that's important, because founders and owners would definitely have a huge reserve to rely on and to come back in new avatars. But what about the number of layoffs and the number of young people who actually invest their dreams in growing unicorns? So I think that's something that we need to be mindful of, and so that they are not discouraged by the entire the startup ecosystem, because that's something that's very promising in India. MSMEs and startups, and this is a very promising sector, and youngsters are very excited about it. So we should not let them get discouraged by the downfall of Byju, but just learn their lessons from the way Byju actually went in a accelerated curve, and then had to come down steeply. So I think there's some lesson to learn in terms of how you can plateau out once you've reached a certain height. So what are the kind of business strategies that we need to adopt to be at that kind of level and an even keel? I think that's something that we can learn from the Byju's downfall. And also about edtechs, I think edtechs also need some kind of regulation in the space. I would differ a bit from Nagarajan. I would say that the government also should play a role, because it's about education and it's about providing education to the next generation. So I think there the government again plays a role, because you have, when you see companies like Coursera and all, the way they run their business, it's a very regulated, and you feel you can depend on Coursera to do a course probably, so. Whereas Byju's, even in my mind, I always was skeptical. I mean, should I actually do something from Byju's, or should I recommend somebody to do something from Byju's? So I think that's something that we need to probably give that confidence to people also about, investing their time, energy, and probably equity also in startups.
Confidence building is key, and we need to give confidence as far as the user at the end of the day is concerned as well, or the consumer too, because that is going to be paramount. All right. Time to get quick closing comments from all the panelists with the best way forward, starting first with you, Mr. Shankar.
Say that we have to accept the vagaries and the fluctuations of the market if we want the startup world to succeed. So there is no way, in my view, that you can assure young people who join a startup and which employs, say, thousands of people, that they are not at risk. Because the other option is regulation, which I think will just stifle the startup world. So let the market analysts, word of mouth, let us have faith in that, and also accept that failure is a reality in life for individuals. It's a reality in life for firms as well as large firms. So on aggregate, if we are getting many more startups and with great dreams and great ideas succeeding, failing, that's the world in which India will probably acquire its full potential. So any attempt at regulation, I am very reluctant and very wary. In fact, I'm one of those who believes that SEBI itself is now probably over-regulating things. We should have fewer regulations, and the law must be enforced well, which is where we are weak. So if there is fraud, somebody should go to prison. That doesn't happen.
Right.
So we try to address that basic failure in trying to do all kinds of other regulatory stuff, which I think, in my view, is probably not as useful.
Get the real culprits behind bars. Don't really regulate, because that kills the ecosystem, is what Mr. Shankar is suggesting. All right, Banu, your closing comments?
I think the Indian startup system is at a fantastic space right now. It has to be nurtured, and if you look at say Amazon, it was actually not profitable for like a decade or so, and so many of our Indian startups are actually just beginning. So we have to nurture them, be patient with them. There'll be some failures, some successes. In fact, like we have given investors a great exit. For example, take the case of Zomato or Nykaa. They are publicly listed companies. They gave very good exits to the investors. So I think we need to have a very very positive attitude towards Indian startups. They will actually deliver. Of course, there should be light touch regulation, but we should not like go deep into having strict regulations. For example, if a startup wants to raise money and like Byju's like sponsor the Indian cricket team, it should be left to the entrepreneur and the venture capitalist. Like the government should have no say in that. So I think it has to be nurtured. We are in a good space. Just like one bad story should not color the whole picture, is my final take.
Absolutely. All right. And Vinita Hariharan, please close the show for us with your concluding remarks.
Yeah, absolutely. So I think focus business strategies for startups, not to spread their eggs in too many baskets, and also look at how we can protect employees from layoffs. I think these are three things. And also when you grow, you also need to exercise caution and plan for a rainy day, looking at the examples of Byju's and also, larger setups like Cafe Coffee Day, which had a huge downfall and cost the life of the entrepreneur itself. So I think we need to also look at those case studies.
True, very true. At the end of the day, we all need to work together and ensure that the startup ecosystem itself flourishes and Indian entrepreneurs flourish, and we see a better economic picture as well. All right, on that note, we'll have to call it a wrap on this edition of The Discourse. Thank you to my guests for joining me on the program and putting things into perspective for us.
Thank you.
Thank you. So what's coming out of this discussion is that Byju's is a classic case of inflated valuation, and the company didn't really plan for the worst. It didn't have a bust plan, which is very important and required. That having been said, we shouldn't write off Byju's just yet. It may come back strong and in a new avatar. There are several lessons for other startups as well, and they should learn from what Byju's has done wrong. Regulation in certain sectors may be needed, but it's not recommended, as we should allow the stakeholders to work things out themselves rather than the government stepping in. Now, the startup ecosystem on the whole is positive, and we shouldn't worry too much. And we shouldn't let one bad color spoil the entire picture. What we need to do going forward is to insulate against herd mentality and nurture our startups in the best way possible. Well, that's it in this edition of the Discourse. Since you've made it till here, I would remind you to like the video, subscribe, hit the bell icon, and share the content so that more people get to know about Bharata first. We also have a YouTube membership program with some great perks. Do check it out under the join button and join now. All right, until next time, this is Frank Rausan Pereira signing off.